TikTok financial gurus, the latest trend. Let's react to some of their videos and see if they're all that they're cracked up to be. How's it going, guys, and welcome to a new series where we react to TikTok financial gurus. Let's see if they're all they're cracked up to be. In my opinion, I think we're going to get a bit of a mixed bag. We're going to get some really bad people on there, and we're also going to get some actual decent information out of some people. But before we have a look at those, please remember to give this video a thumbs up if you do enjoy it, and subscribe for more investing, stock market, wealth management, and cryptocurrency content. And I'd love to know your thoughts on these TikTok financial gurus down in the comments section below. If you think any of them are good, if you think any of them bad, if you have some really good ones, let me know down who they are and I'll have a look at those as well. So without further ado, let's get straight into today's video. You guys know that I am a big stock market investor, so what better tag to start this series off with than Stock Talk. So let's have a quick look and see what there is here for us. Look, there's a Tesla. Why not have a look at this one first?
Penny
Let's
stocks
go.
That will go crazy this week.
3 penny stocks. Come on. Okay, giving us a... Oh, no evidence. Literally nothing.
3 penny
Oh
stocks.
man, this is just insane. This is one of the biggest issues with these financial gurus. They tell people to buy these stocks. They're effectively pumping these stocks, but there's no basis behind them. They're not providing any breakdown or legitimate information. They're literally just listing these stocks. They got a fancy car there, Tesla, and they're telling people to buy it. And unfortunately, a lot of people will base their investing decisions on videos such as this. Terrible decision. Do not do it, please. Please, I highly implore you to do your own research on stocks and not listen to people doing this sort of thing. I mean, they could be good stocks, but we would not have a clue just from this video. So let's move on.
Is it true that you have 5 sources of income? Yeah, that's right. Well, come on, tell me what they are. Well, first, I have a traditional 9-to-5 job. I also do paid partnerships with brands I love. I own this duplex, which provides rental income. I receive affiliate marketing income, and my stocks provide dividend income.
Awesome.
Man, that's awesome. How do you keep track of it all? What do you mean? Don't you have to pay taxes on all that income? Oh, that's easy. I use TurboTax to file my taxes. TurboTax makes it super easy to file returns with multiple streams of income. They also have live experts to walk you step by step filing your own taxes. So whether you've sold stocks, traded crypto, or received rental income, TurboTax can help you. Click the link in my bio to get started with TurboTax today. Is it true?
That's obviously a paid advert sort of thing. Nothing too interesting there. But the point I would like to look at is the fact that he's got 5 sources of income. And that is really, really important. If you want to get anywhere in life, having just the single traditional 9-to-5 job, unless you're a CEO of a company, it's not going to get you anywhere. What you want to start to do is develop those other sources of passive income, whether that be rental, dividend, or, you know, he was saying with affiliate marketing, that sort of stuff. Generate those revenue streams. They are going to help you out immensely in time. And the effort you put in now is going to pay off significantly in the future. So that's great. Apart from that, TurboTax, who knows what it is? Honestly, no opinion on that. So let's move on.
I win. Policemen swear to God, but sleeping from the guns. That's right, I win. Policemen swear to God, but sleeping from the guns.
Little motivational video. There's not much to it. Good on you. More of a flex than anything else, to be honest. Whatever.
Hey, I'm gonna invest in GameStop. Oh, why?
The infamous
Stock doubled
GMA.
in a week. It's going up. Oh, before you invest, do you know why GameStop went up? Nope. A lot of people on Reddit bought their shares, forcing the price to...
Yeah, before we move on, before you invest, do you know why it went up? Nope, but I want to invest in it anyway. Oh, you got to look into these things.
go up and then force a short squeeze on all the short sellers. All I heard was squeeze. Just letting you know, GameStop is going out of business, so before you invest in anything, it's always best to do your due diligence and not just listen to anyone on the internet. But it's going up. Hey, I'm gonna...
Yeah, no, It's facts, man. Everything he's saying is absolute facts. As a company for an investment, GME, especially at the time of when this was likely published, was not a good investment. It was an absolute short squeeze. It was a pump and dump. And you saw the price of GME go up parabolically, and then it came down in the same fashion. Now, GME's turned into a bit of a meme with the assistance of Wall Street bets. So as a result, the stock has actually made a bit of a recovery. And we're seeing the short squeeze continuing. A lot of those hedge funds are still shorting GME, but all these people on Wall Street Bets and other forums are still buying the stock, which is crazy. It's one of those unicorns. I think personally, too risky for me. Not interested, but what this guy's saying is actually legit, and I really, really like that. Oh, is this that same guy again? $20 a month, 13, yeah, the time. Well, yeah, I suppose that's probably what he was showing in the last video as well. There's nothing really too financially savvy about that. It's the power of compounding. And it is something that you really need to learn and take into account. And as you can see, through the power of compounding, he's able to retire with effectively $517,000 with only a very small investment on a regular basis. Anyone can do it, but it comes down to the fact that, do you want to retire comfortably but still work your entire life? Or do you want to make more informed decisions, more informed investments in order to get there significantly earlier, retire in your 40s or in your 30s even? That is, to me, the true goal. But by all means, make sure if you're young right now, start early. And one of the easiest ways to do that is just invest a small portion of your money into something like a blue chip stock, which is growing at a rate of roughly 5% a year, for instance, and diversify your portfolio. There's lots of ETFs and that sort of thing which do similar things to that. And you can easily achieve this with not much capital investment at all. So let's check the next video.
The baddest thing around town. She's nothing like the girl you've ever seen before. Nothing you can
Next.
Dude, on August 24th, Apple stock is only going to be $100 instead of $400. The stock's crashing? Yes. Nah, I'm just playing, bro. See, this is why we got trust issues. Apple is doing a 4-for-1 stock split.
Yep.
What's that? So imagine one stock of Apple is a cake, and this cake costs $400, but you can't afford a $400 cake. Not since that Dogecoin sell-off. But the store wants to encourage more people to buy the cake, so they cut it up in 4 different slices, and they sell each slice for $100 each. So the store made it easier for me to buy the cake, but I'm still only getting as much cake as I can afford. Dude, on August 24th, Apple stock is...
Basically, what this guy's saying is there is going to be a lot more shares on issue of Apple. But if you're an existing shareholder, that won't mean you lose out in value. It is not necessarily the best decision for a company to make for the best interests of their current shareholders, but by doing so, they're able to attract new shareholders. Loud car going past. And basically what that means is it's cheaper to get into the stock. So for instance, it's easier to accumulate, 10 shares at $100 than it is to accumulate the same amount at $400. High liquidity, all those sorts of things. But is it something you need to worry about? Probably not with Apple, because it's a dividend paying stock. So yeah, this is a decent video as it explains in pretty basic terms exactly what a stock split is and what's going to happen. So, here we go. This is the same thing as well. Flexing with the car, I bet they're going to tell you what stocks to buy without any... Yeah, there's nothing. There's nothing behind this. Oh, stupid. Nah. Don't. Please do not listen to videos like this. Waste of time. Complete waste of your time. Move on. Here we go, investing psychology.
A lot of people don't realize that the biggest factor in investing is in their psychology. Imagine you want to invest, but you want lots of money, so retirement investing seems dumb because you have bigger dreams than that. But you're not doing anything right now.
Yep.
So you start with something we already know works,
Yep.
basic long-term investing. So you invest $10 a week for a month.
Yep.
Now you have something, and you had a month to research what to do next. So you buy some stock, and now you invest $20 a week for a month. Now you can start to see the potential, so now 40 a week for a month,
Yeah.
and then 80 for a month. At this point, if you are 20 years old, you can retire at 65 with $1.6 million. But
Yeah.
now your identity has changed. Now you're the person who invests money. So you start getting excited.
Yep.
You start finding new ways to invest.
Yep.
You figure out how to retire when you're 50 while continuing this long-term strategy. Then 40, then 35. All because you did something you thought was pathetic for 4 months. A lot of people don't realize
It's true, and it comes down to psychology. You need to be in that investing mindset. And the best thing to do is, honestly, just get started. Just start putting aside a small portion of your income and dedicating it to your investments. I reckon the stock market's one of the best places because it is so easy. There's not many barriers to entry. You don't need much money to get started. And yes, you may lose it on the outset, but at the end of the day, you're learning. And that is the most valuable experience. Make sure you take those losses as lessons, so you're not making those same mistakes again, and instead you can avoid them and make a profit next time. But 100%, I've seen some of this guy's videos before. They are actually pretty decent, and what he's saying in these videos, it makes sense. And as he mentions, investing's all about psychology, and becoming an investor and having an investing mindset requires you to rewire your brain. We are programmed to have a consumer mindset, so naturally we go towards the consumer side of things. Let's move on.
Being 16 years old and working. Yes, you can be a multi-millionaire starting now.
What?
As a teen, you're probably making somewhere around $12 an hour. Working around 25 hours a week, so every 2 weeks you make $600. And you're in a fortunate position where you don't have any debt or bills right now. And here's something a lot of entrepreneurs do that most people aren't willing to do. They say, I don't need these $600, so I will save $400 of these, and $200 I will use for myself to buy clothes, buy food, or whatever. And of those $400 you save, put 200 of those in a cash savings account and the other 200 in the stock market. Now learn how to value invest for the long term. If you don't know how, I have a video walkthrough. Check out the link in my bio.
Yeah, well, I mean, that's basic budgeting, right? It's nothing too complex there. All he's saying is effectively allocate 1/3 of your income to your expenses, 1/3 of your income to your savings, and 1/3 of your income to investments. Simple as that. I disagree. I wouldn't personally do that. In fact, I would accumulate savings to a point where I have my safety net of 4 to 5 months worth of income sitting there in a bank account. Then anything that exceeds that point that doesn't go to expenses goes into my investments, because then you've not got cash sitting there and just wasting time and losing value due to inflation. Let's check out the next video.
Hey, I heard our friend took a short on GameStop.
Oh no.
I don't want to talk about that.
Oh, what? It's been a rough day?
Oh, is this real?
I said I don't want to talk about it. Really like getting screwed over
He's
by
getting teary.
shits on Reddit.
Someone a little angry that it's not them who's manipulating the market this time?
Yeah, it's very funny.
It is really funny, actually.
He
I don't
actually
have a
looks
job anymore.
stressed.
Thanks. Don't have a job.
Now you have to make do with one summer home and not two.
Uh-huh. I mean, if you don't work at a hedge fund, then yeah, it's hysterical. Yes. Haha. Memes. Fun.
Is this real? I can't tell.
Fuck you.
Hey.
Oh, the poor guy, man. Oh, that's what hedge funds do, though. That's what they've been doing to us retail investors for literally eternity. They have been screwing us over. They've been manipulating the markets, and as soon as the roles are reversed and companies start getting screwed over, and hedge funds, then all of a sudden, it's a bad thing. What are you doing? That sort of stuff. Oh, come on. Like, at the end of the day, it was the hedge fund's decision to short GameStop. Where are the consequences? They could have pulled their short straight away if they wanted to. Obviously, they'd have to buy back at whatever price, but, you know, it is what it is. There's many hedge funds who actually made a lot of money off GameStop by buying it low because they saw what Wall Street bets were doing. So, at the end of the day, it's not anyone's fault. it's coming down to taking accountability of your own investing decisions. So whether you're an individual or a business, take accountability of your own decisions at the end of the day. And as I said, Wall Street, hedge funds, all that sort of thing have been screwing over retail investors for who knows how long. So as soon as it is the roles reversed, we get this sort of reaction, you know. It's crazy. I don't know if this is legit or not, but it is what it is. I'll wrap up today's video there, guys. I hope you enjoyed it. As you can see, it was quite a mixed bag. We had some actual legitimate good information, but then we just had some absolute trash as well. People just saying buy these stocks for no reason, avoid it at all costs. Pump and dump. Simple as that. And what you'll probably notice is 1 out of their 5 or 6 stocks will go up, and then all of a sudden that's all they'll focus on. They say, yeah, look, I picked this stock and it went up 100%. But all the others dropped, 100% as well. So it's irrelevant, really, to be honest. But if you did enjoy today's video, guys, please remember to leave a thumbs up and subscribe if you're interested in seeing more stock market, wealth management, cryptocurrency and investing content in general. I'd love to know your thoughts in the comments section below on whether you enjoyed this series or not, or I should continue, and your thoughts on those financial gurus on the likes of TikTok. So without further ado, I'll wrap it up, guys. I hope you have an awesome day. I'll see you next time. Cheers.